This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, across Bloomberg platforms. Yes, indeed. On this Thursday, May 7th, 2026, Carol Massar, Tim Stenovec, live here at Bloomberg headquarters in New York City. And we've got a lot coming at us. Investors trying to make sense out of headlines out of Washington and what's going on in the Middle East. Are we getting closer, Tim, to a peace truce?
Well, that was the idea earlier this week. And there was that back and forth with the president about, Project Freedom. Unclear what he's actually going to do, what the administration is actually going to do to get ships through the strait, and that's sending stocks a little lower right now.
Yeah, we've definitely seen some pressure and definitely off our best levels of the session. We're going to get a read on the markets for you in just a moment. Also ahead this hour, Fed Speak. What's going on with interest rates? What's likely to go on? Our own Mike McKee sitting down with the president of the San Francisco Fed, Daly, just a short while ago. So we're going to talk about that. It's all timely ahead of the monthly jobs report tomorrow. And then later on here on Bloomberg across our platforms, Double Line's Jeff Gunlock. Massive in the fixed income space, critical of things like private credit. We'll see what he has to say, though, about the fixed income world.
Yeah, that's happening in the 4 o'clock hour today. Also a read from the C-suite and on our love of pets. Say, Carol has... How many? You have 2 dogs at home,
I have 2
right?
dogs.
Okay,
I've had as many as 3. All I know is the vet bills. Oh, my God, they're off the charts for just walking through the door.
Former pet owner, now current child owner.
It's hard.
That sounds weird, but you know what I mean.
It's hard to do both.
It's hard to do both. We're doing children right now. Little kids now.
They're fed. They have a great home.
That sounded weird, but you know what I mean. The CEO at Elanco Animal Health is going to be joining us in just a few minutes. Didn't you miss me?
I missed you a lot, actually, and you've got to come with me next year. No doubt about it. I think we should, all 3 of us should do 5 hours of programming, but don't tell anybody.
Okay.
There's so much going on there. There's so many people, and it feeds so much into the business week world.
We're going to be touching on a lot of your coverage from Milken over the last 3 days.
Speaking of Milken, there were many issues that we pointed out in our coverage over the last 3 days about what's coming at global leaders. We're going to get another view on that with Rebecca Homkes over at the London Business School. We really love her perspective on what she's hearing from the C-suite.
Okay, I got a better one. Former pet parent, now child parent. How's that?
Okay.
That's better, right?
You're really worried.
I'm a little worried about that.
It's your wife on the phone.
That's a little.
Hey, and with all that AI coming at us, we've got to dig into, is it good for our brains? I'm guessing no, as you can tell from us two maybe today. Our psychological health. It's something you and I talk a lot about. Social media, AI. Sorry. Aren't you glad we're back?
Oh, I'm so glad we're back. All that and more coming up over the next hour right here on Bloomberg Businessweek Daily. First up, though, a check of the day's trade and top business stories. Here he is, Charlie Pellet.
All right, thank you very much. Welcome back, Carol. Got to get right to the oil markets. It has been extremely volatile over the past couple of hours. Right now, we are looking at a turnaround for crude, specifically WTI. We are back in the red. Translation, crude oil now moving lower, bouncing around. Brent crude just above $100 a barrel, was trading below that earlier today. Right now, we are down 0.5% for a barrel of Brent. WTI very close to $95 a barrel, back in the green, moving higher now, up by about 0.1%. But the key takeaway right now, crude now swinging between gains and losses. S&P very close to session lows. This after the Wall Street Journal reported that the U.S. is looking to restart Project Freedom as early as this week, and that Saudi Arabia and Kuwait have lifted curbs on airspace access. So right to the numbers, S&P down 25 now, down 0.3%. We do have the Dow down 331, drop there of 0.6%. NASDAQ a little change, down under 0.1%. NASDAQ 100 index down by 0.1%. We did have the indexes and averages spending much of the morning higher, but right now we are retreating from records on the S&P. 10-year 4.38%, the 30-year 4.96%. Gold at $47.10 the ounce, up 0.4%. And again, WTI $94.95 a barrel. It is down by about 0.1%. Briefly, Datadog shares surging by 28%. That's the most in more than 6 years, after the software developer raised its full-year outlook for sales and earnings. Recapping, the S&P down 0.4%. Carol and Tim, That is a Bloomberg Business Flash.
All right, got it, Charlie. We'll be back to Charlie throughout the next 60 minutes. Well, even as AI tops the list of reasons for cutting jobs, reflecting its growing impact on the labor market, layoffs have remained broadly subdued overall. We got a read on that today. Persistently low levels of initial claims are feeding into lower continuing claims, pointing, Tim, to limited pressure on the unemployment rate. Of course, we'll get a read on that tomorrow.
I was going to say, we can say whatever we want right now, but we'll get the read for, the prior month, April, tomorrow morning.
Drum roll, please.
Okay, drum roll, please. Another data point that we got today. U.S. labor productivity continued to rise in the first quarter, though at a slower pace. It indicates that companies are gradually improving worker efficiency to mitigate costs. Again, tomorrow's the one that matters.
All right, with all things eco and things that are coming at the Fed and what's the Fed thinking as a group, we head to the Bloomberg San Francisco Bureau to our own Bloomberg TV and radio international economics and policy correspondent. He's, of course, Michael McKee, busy out there talking to those Fed chiefs. Mike, we're going to play a little bit of sound from your interview, but before we do so, you caught up with Mary Daly, and I'm just curious, what was top of mind for you and how you were thinking about the macro backdrop as we get ready for tomorrow's jobs report.
Well, she said to say hello to you and point out that it is
So
Bloomberg
glad.
rules that we both can't be in the same place. If you're not in California, I have to come out here.
I'm glad she understood that.
She's like, feels like everybody else. There's just a lot of chaos in the world. There's a lot of craziness, and there's something new every day, and that makes it very hard for anybody in a policymaking role to make policy because they don't know what the impacts are going to be. So we had an interesting conversation about that, and of course, we had to ask about whether she believed that those who dissented on the bias were right to do so, and she's not as convinced as Susan Collins from the Boston Fed is. Collins, who is also not a voter this year, telling Bloomberg News yesterday that she would have voted with the dissenters if she'd been a voter this year.
All right. Well, great stuff and great setup for a little bit of your conversation, which we want to play because you did look back at the decision, the dissenters, and you look forward to tomorrow's jobs report in the labor market with Mary Daly. Everybody check out a little bit of Mike's interview with Fed President of San Francisco, Mike McKee, of course, doing that with Mary Daly.
So for me, it's really about the right policy decision was the one everybody agreed to, which is hold the rate steady, continue to collect information. And you see in markets pricing even today, markets have priced in, equal probabilities of a cut versus a hike. And the most likely probability is that we hold steady. And I think that's well positioned. The real signal about the meeting is that everyone agreed to the decision and that the communication that the chair made in his press conference is, higher for longer relative to last year. But the households, businesses, and markets had already priced that in. The labor market is stable right now, but it's not creating any inflationary pressures, and businesses are cautiously optimistic. So that's a good dynamic for the economy, and one where I expect inflation to come back down to our 2% target. But the main issue is, what is the risk out there? How does the oil price shock, move its way through the economy? How long does the conflict last? And can we really get that 2% target that we've been working towards?
Yeah, very articulate, Mary Daly. Obviously, that's why she is president of the San Francisco Fed, Mike, and I am not because I'm having trouble getting words out today. It was a late flight back.
I was going to say, you're still in a different time zone, Carol.
They're making fun of me back here. Hey, but great interview, Mike. Your takeaway.
Well, I think that the takeaway is, given the situation at the moment, that she would not vote for any kind of rate cut. She doesn't think that the economy needs a rate increase at this point, and it's kind of hard to give any kind of guidance. She's looking at what central bankers call scenarios as opposed to forecasts. If the conflict goes on and oil prices stay elevated, what does that mean for the economy, and therefore what does it mean for monetary policy? Or if it ends fairly quickly and prices come down, what does that mean for the overall economy? Then layer on top of that, one of her big interests is AI and what it's going to mean for productivity and for the economy. And there's a lot of unknowns out there. So for the moment, she's happy with where policy is because she thinks it's restrictive enough to bring down inflation, especially once the war ends and oil prices go down.
We're interested in those things. We're also interested in what the Fed looks like under Kevin Warsh. And I know you asked her a little bit about that. What have her conversations with him been? And what are her expectations, not just for the path of rates, but for the way that he views the role of the central bank?
Well, she hasn't talked to him in person lately, but she's known him for many years. And most of what he suggested he would like to do, she said she's open to discussing without endorsing any of it. We talked about the balance sheet, and there's two ways to look at bringing the balance sheet down. One is to change the way you do monetary policy and go back to a scarce reserves regime, and the other is to just make the balance sheet smaller but find other ways to provide liquidity to the markets when the banks need extra. And she's willing to talk about both of those. She's also willing to talk about what they do with the SEP, the Summary of Economic Projections, and the dot plot, although she is in a scenario mood right now because of the unknowns. So she wasn't going to commit to getting rid of the dot plot, but she does think it's important to give people an idea of what the Fed is thinking and how they are thinking about the economy.
And we're getting an idea, Mike, of a broad swath of Fed presidents and Fed heads, what they're thinking. We heard from Susan Collins. She did an interview with Bloomberg News. You're going to talk with Austin Goolsbee of the Chicago Fed tomorrow. You know, what I think is really interesting is when you do get some differences, you understand this debate that goes on at the Fed. It is a reminder that there is a Fed chair who holds a lot of weight, but there are a lot of views that go into those Fed decisions.
19 people on the committee, 12 of them vote at any one time, and so there are a lot of different opinions. And remember that 12 of the members of the committee come from different parts of the country. 7 governors sit in Washington, D.C., but the rest come from different parts of the country, so they see things differently. Mary Daly was saying that people here are very upset about gasoline prices, but they are not as upset about overall life, I guess you'd say, as people are in some other parts of the country. And so people come at it from different points of view. If you're in an agricultural district, you're going to have maybe a different view than if you're in an industrial district. So all of that has to get worked out in the service of basically one tool to deal with interest rates. And so there are a lot of discussions. Kevin Warsh wants family fights, he says, in their discussions, and I think they're already getting them.
Rock, paper, scissors, that's how they do it, Tim. No, I know that's not how they do it.
No, everybody knew you were being totally serious. Hey, Mike, before we let you go, you mentioned some data points, and there's a story on the Bloomberg terminal. Kraft Heinz CEO saying that consumers are literally running out of money at the end of the month, yet we are seeing stock markets at record highs. It does point to this sort of dichotomy between what we're seeing on Wall Street, what we're seeing with Main Street. Kind of back to your question about gas prices and Carol's question about gas prices. How does the Fed reconcile this?
Well, it's the K-shaped economy, and Mary Daly did say that people on the lower end are cutting back. They had traded down the old stop buying steak, start buying chicken thing, and now they're not even buying as much chicken because they can't afford it because they got to spend so much on gasoline. And, of course, this is a driving culture out here. And that is, I think, the way most of the country is going. When you have your money coming in from capital, basically interest and dividends and that sort of thing, you're much less concerned. But people are apparently becoming more cautious about spending, even if they're in the upper levels. But the lower level people don't have the money, and so they are cutting back. And the question is, how long and how far does this go? Because you don't want to see so much demand destruction that you start creating the conditions for a recession. So the Fed is going to be concerned about that as well.
All right, got to leave it there. Hey, Mike, good stuff. I don't know. When you're coming back, just let me know, because then I'll get on a plane and head back west, okay?
Yeah, we got to split our time out here.
All right, that's a deal. All right, Mike McKee, thank you so much. Bloomberg TV and Radio International Economics and Policy Correspondent Mike McKee. We want to get a read, though, on the macro, Tim, and we've got one from the C-suite, a stock that rallied big time yesterday, but's given back a bunch today. Yeah,
we're talking about Elanco Animal Health, $11.8 billion market cap company reported earnings yesterday. Here to talk about the results, the outlook, and the macro coming at the company is the president and CEO of Elanco, Jeff Simmons, with us from Greenfield, Indiana. Jeff, good to have you on the program. What are you seeing that gives you a picture of whether or not we are slowing down when it comes to our spending on pets?
Yeah, I will just say animal health has just completed one of the biggest years we had in 2025. 10% growth on the farm side, up high single digit on the pet side, and we see no slowing. We just recently completed a survey. Some of this is part of the industry in our company where spend is up, $500 a year plus on pets. If, the expectation of care is high, you've got to bring value, you've got to bring convenience. But if you do that and you can reach the global market, 70% of new puppies are outside the U.S., so that global footprint matters. Listen, with expectation of care growing, the willingness to spend, we're seeing it. And that's what turned in the best quarter since we spun out of Eli Lilly in 2018 that we turned in and announced yesterday with 10% growth. And we saw that growth on both sides, pet, farm, international, and U.S.
Yeah, it's a great read. And, what's interesting, it's in contrast to what we're seeing from some other players in this space, Zoetis and also Merck's animal health segment. I want to ask about those results because you did, as a result of what you reported, Jeff, it seems that you guys are actually gaining share out there as some of your rivals are having a tougher time. First time in many years that we've seen your company outperform some of the competitors that are out there. Investors are focused on durability of these gains. They want it to be not just a one-quarter thing. So how heavy is the company cutting prices, trying to hold on to that share and gain even more?
Thank you for the question. I'll just say we've been on a path. We're in the midst of 3 years of consistent growth. And let me contrast a little bit. First of all, I think the industry is extremely durable, and we can come back to it. But, animal protein is growing significantly. Meat case sales are up 100% the last 5 years, right? Cottage cheese, meat sticks, the milkshakes, the new dietary guidelines, GLP. So protein is, we're expecting 5% growth in protein. And then on this pet side, as I said, high single-digit growth. So then, what's going on underneath? When you start to look at companies, Elanco, let me contrast a little bit. First, it's innovation. Just like on the pharmaceutical side, we've launched 6 blockbusters in major markets. $2 billion derm market, we got the 2 fastest growing products. $6 billion parasiticide market, we've got the best medicine and just shared record market share growth there yesterday. And then the beef market, we know what's going on in beef. So I think it's innovation, 1. 2 is we bought Bayer a few years ago to really, they had a retail business. We've got an omni-channel. We announced yesterday, we're in the dollar store now, all the way to Costco. We have the OTC leadership in pet. I can take you online to Chewy and Amazon, to the dollar store, all the way to a complex product in the vet clinic. Nobody reaches more pet owners where they want to shop at the price point than Elanco. And then we've got a big farm animal business. We're number 1 in beef, swine, poultry. So that diversity matters, reaching more customers. When you're dependent on one innovation in one country, you become dependent. Elanco for the rest of this decade, and we laid out in our investor conference, we're looking at mid-single digit consistent on the top, high on the bottom, and low double digit on EPS. And we feel very good about that. And I think our stock performance has shown that over the last 12 to 14 months. And I'm more excited about the next 12 to 14 months.
Hey, Jeff, we only have 20 seconds left, but the durability of the protein craze right now, how do you know that that's here for good? Very briefly.
Yeah, I think it's not one trend, it's many trends. And it's not just the U.S., it's global. Wellness. We used to be all about, get meat into the diet or milk or whatever. The protein is higher quality, a lot more, over 1,000 new products in dairy. And people are seeing this, that, hey, protein, muscle retention is the key thing for that aging population, GLP use. So I see many more converging trends, and it's going to drive volume growth, not just share growth.
I got to say, the dog food we feed our pets, man, it is specialized, different ages, keeping them thin. It's interesting stuff. Jeff, come back soon. We'd love to do more with you. Jeff Simmons, of course, the CEO of Elanco. This is Bloomberg.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Very much in the red right now, off session lows, but still a down day for the S&P 500 index, retreating from yesterday's record. S&P right now at 7341, down 24 points. That is a drop of 0.3%. A rally that drove stocks to records is faltering. Oil is whipsawing as doubts resurface about an imminent U.S.-Iran deal. The Dow now down 251, drop there of 0.5%. 0.4%. NASDAQ down 16, drop there of 0.1%. And the VIX holding above 17. The 10-year at 4.38%, with the 2-year 3.91%. And the 30-year now up to 4.96%. Gold is up $18 the ounce, higher by 0.4%, 47.09 on the precious metal. West Texas Intermediate crude now lower, has been bouncing around 94.72 on WTI, down 0.4%. Barrel of Brent just above $100, down by 0.8%. But to be clear, we are seeing a very volatile oil market today, bouncing between gains and losses. As of now, trading below 95 on WTI, down by about 0.2%. Peloton Interactive has raised its outlook for the full year, suggesting that a turnaround fueled by new commercial offerings and upgraded equipment is on track. Peloton now up by 8.7%, but Planet Fitness is slumping after the budget-friendly gym operator cut its full-year revenue outlook, citing weaker than expected member sign-ups during the typically busy New Year period. Planet Fitness right now down 32%. Recapping, stocks lower, S&P down 0.3%, crude WTI 94.86 a barrel, down 0.2%. Carol and Tim, that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So as we know from Charlie, investors still keeping an eye on what's going on in terms of the U.S. war with Iran, peace talks. Are we getting closer? We did see Tehran laying out a set of new rules for vessels seeking to transit the Strait of Hormuz. This was coming from CNN, citing a document. We had a Wall Street Journal headline, right, as well, a little while ago.
Yeah, also on that, Carol, Iran's leaders have yet to indicate whether they'll accept the terms of such deal, which includes a moratorium on enriching uranium. I think a lot of investors have questions about, well, wait a second, if a deal doesn't include the uranium enrichment program.
What was this all about?
Took the words right out of my mouth.
Because we say it, right? You say it, I say it. All right. So we do see in the markets a rally that drove stocks to all-time highs faltering as investors kind of await for what's next here. For an update, we do want to head to the Bloomberg Washington, D.C. Bureau. That's where we find Iain Marlow. He's Bloomberg News National Security Editor. Iain, we've been here before. I feel like Snoopy, the football, Charlie Brown, is the football going to be pulled out from under me? Is this something more significant? Do you feel like there's actual progress here?
The problem is you never know when the football's being pulled until you've already kicked to some degree. And I think we're in that position yet again. I think, to add another grain of salt here, Trump announced that they were close to this deal as he orchestrated this enormous U-turn where the U.S. military was in the middle of this operation to try and pry open the Strait of Hormuz with, force and getting ships to come out under protection of the U.S. Navy and other military assets. And that basically almost collapsed the ceasefire earlier this week. And then, Trump announces that effort is over and that we're almost close to a deal. And yet none of the other significant things have changed. And as you were saying earlier, what was this all for? We're now in a situation where the justification for the conflict that Trump eventually settled on, which was Iran's nuclear program, and there were several justifications before that, we now may be getting to, a quote-unquote end to this conflict, and the nuclear issues will be punted down the road for some other kind of negotiation. And I think it's unclear if that negotiation will fully take place and whether it will yield the type of comprehensive deal that Trump himself pulled the U.S. out of before what was known as the JCPOA. And so we're in a bit of a strange situation here where the main justification for the war is basically being put off because Iran has enormous leverage by shutting the Strait of Hormuz, which the U.S. has now, doubled down on with its own blockade of Iranian ports. And so, that pressure is meant to push Tehran into making a deal, but you've basically got two governments here that are on very different timelines. Trump wants a quick out. He wants this war over. He wants gas prices down. And Tehran is looking at a sort of existential survival here. They've gone up against the U.S. and they've been battered, but they are still, in a way, able to influence events here. And so they're trying to get out of this without giving up too much.
Yeah. Tick, 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 right? But we know there is a deadline that President Trump has given Tehran. Iain, thank you so much. Appreciate it. That, of course, is Iain Marlow, Bloomberg News national security editor. This is just one of the things that we know global leaders, Tim, continue to keep a watch on.
Yeah, I mean, Iain mentioned that the president wants to see gas prices come down. He's certainly midterms on his radar. They're on our radar here. Supply chains, inflation, AI, all of that right now coming at global leaders. And these leaders really have to navigate different layers of uncertainty that is today's world. For more, back in our studio, Rebecca Homkes, faculty at the London Business School and at Duke Corporate Education. She's also the author of Survive, Reset, Thrive, Leading a Breakthrough Growth Strategy in Volatile Times. Good to have you back on the program. When we think about the sort of litany of challenges that investors have to face right now, that corporate executives have to face right now, what's the number one thing that's concerning them?
I think it's a trifecta, right? Okay. It's not number one. It is the economy, it is the war, and it is AI. So these three things are coming together. Equity markets react on a daily basis to what's going on in the war. That's not how corporate strategy works. Like, you can't be making these daily things. So, what we're looking out for is what I call the 3Ds when it comes to the war. It's duration, devastation, and disruption. So duration matters. The shorter the war ends, the more, corporate strategy is not affected. Devastation, are energy assets actually devastated by what's going on, or can they open back up quite quickly? And how much disruption is there to global trade? Even if the war ends next week, if there's devastation, disruption, it will be months, if not next year, before we see some of these gas prices normalize. So that's a trifecta that's going on right now. But of course, these three things really do relate to each other.
We keep thinking about, and it's something that came up in Milken Conversation, supply chains, right? I mean, everybody's doing this data center build. They're talking about they need energy, but they also need components to build all this stuff. And that's true. Pick your industry. Everybody, I think, is more domestically looking at what they can do to protect those supply chains, and just tell you they're having multiple outlets. That, to me, whether the build out or having redundancy, is going to cost the world more, and just to me says we live in a higher inflationary environment.
I can't emphasize this enough. Like, chaos has a cost, right? And the more chaotic the environment is, the more of a cost corporate leaders and CEOs have to pay. Now, the great leaders are actively on a day-to-day basis saying, how can I not pay this cost? But chaos has a cost in stalled decision-making, in analysis by paralysis, and in all the redundancy you have to put into the system, especially the supply chain. Look, even if we wanted to bring all of this domestic manufacturing back to make the data centers, it would be years. We're not even close to that. So our global supply chains have had a COVID shock, they've had a tariff shock. Now we've got what's going on with different things closed. So it's quite a lot right now. And again, this chaos has a cost, which you need to actively manage down on a day-to-day basis.
What is that cost?
There's a tangible cost, right? Because slow decision-making or paralysis, paralysis has a real cost for organizations, and the hidden one is actually the scariest. So when organizations keep delaying and delaying, we always give ourselves these artificial deadlines. We'll just wait until after the war to make this decision. We'll just wait until after the Supreme Court decision. Every time, Carol and Tim, you keep punting a decision, you actually, as an organization, lose a growth and performance muscle. Growing and executing in the market is a muscle, and the more you put your teams on hold, you actually lose that muscle. So the mid to long-term cost of chaos is much higher for organizations. They're actually losing this discipline and this execution muscle, which is why when we have these chaotic times, we see such a separation of the great performing companies and the average and the many who just don't fare very well.
And then there's also the cost of people. And, there's a story that we've been talking about. Executives across retail, restaurants, packaged goods are increasingly worried about U.S. shoppers with tighter budgets amid surging gas prices caused by the conflict in the Middle East. And Tim, you talked about this, the Kraft Heinz CEO saying they're literally running, out of money at the end of the month. We're seeing negative cash flows in the lower income brackets where they're dipping into savings. We have a lot of folks around this table who talk about market highs and wealth creation. I get it. That's all good, but it's not trickling down, and I feel like there is a cost to society and economic growth and just, our quality of life here.
So the K is here to stay, and some folks who want to argue against it will find these micro data points.
But the K
is here to stay. The K-shaped economy is here to stay, and we continue to have more and more data reinforcing it. Now, it's not accelerating as much as it was at this time last year, but the data is still showing that our equity markets are being propped up by a very small number of consumers. Consumer spending is led by a very small, 50%, still that 10%, that figure last year still holds. And if you dig into retail sales data, we had a slight bump in March with almost completely correlated correlated to the tax refunds. And I caution CEOs, it's like an insulin shock. Like you got a little bit of it from those tax refunds, but that's going away.
If the K is here to stay, does it get more pronounced? And the reason I ask is because if wealth concentrates with a smaller group, but they get more and more of it, and then a larger group gets less and less, then that's a recipe for political unrest.
It's a recipe for political unrest. I have the very annoying "it depends" answer onto whether or not it accelerates. And it comes down to those 3 Ds. If duration is long, if devastation is there, and disruption happens, then the K will definitely exasperate because that's what's going to happen. You know, energy is a small percent of daily spend for an American consumer, but energy as an input is a large percent of that monthly wallet. And wages are relatively stagnant in the U.S., especially at the lower part of that K. So we are getting very distracted by headlines that say, hey, the U.S. GDP is growing, equity markets at an all-time high. Those headlines are all true, but it disguises a very nuanced storyline that matters to the majority of companies in the U.S. who have to serve both parts of the K.
Okay, layer on top of that artificial intelligence.
Yes.
Coming up also, our conversations came up at Milken. I can't remember who it was, but I think it was one of the big PE giants, but just saying that blue-collar jobs, it's going to be great for all the building. But, you know, you're not going to be building forever. Yeah. So at some point that goes away. But when you layer AI on top of it, what are you hearing from executives and heads of organizations? Are they like, I don't know the cost, or it's making it so that I don't need as many people in the office?
Very few. The headlines about replacing jobs with AI are incredibly overstated. There are only a handful of companies who have actually replaced jobs with AI. There's other R's that we're seeing. It's reallocation, right, and restructuring. So a lot of spend is being reallocated. I've got X billion dollars in free cash flow. I need to now fund the data centers. I'm reallocating from hiring new teams, or I have to lay off teams to do that. We're also seeing restructuring. A lot of companies were not fit for growth, right? They have been overbloated, too much hiring since COVID. We see that very empirically. There's a restructuring going on, and frankly, a rectification for some past lack of discipline. So those are the R's that you're seeing. Now, Carol, the data is showing that on entry-level jobs, there are less job openings at the entry level, and that is where we're seeing a bit of it. So right now, as far as the empirical data, it's case studies, and it's the younger worker entry-level job.
I will say we're going to hear from Block after the program today. They're reporting. And I mean, I feel like you were talking about that was the criticism when they announced those big layoffs, that there was all this.
But Block also built a dual business model for several years with 2 companies that they put together, which led to a lot of this as well. And I think this is the issue. Every single company, and there are very few who are doing these amount of layoffs, there's a real organizational reason behind it. Now, I'm not saying it won't happen.
Right.
But where AI is in most organizations now, it's still what I call dabbling. There's a small percentage who are being deliberate, and even smaller percentage who are directly linking it to value creation outcomes.
Blackstone President John Gray and NVIDIA CEO Jensen Huang were among those who talked about the blue-collar jobs. Rebecca, we got to run. Rebecca Homkes at the London Business School joining us right here in studio. Thank you as always. Appreciate it.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got oil bouncing around. West Texas Intermediate crude back in the green, trading higher now by 0.2%. A lot of uncertainty in a very volatile oil market. Barrel of Brent holding above $100 a barrel, $100.39 on Brent. It is lower, however, on the day, down 0.9%. West Texas Intermediate crude 95.39 right now, up by about 0.3%. So oil is whipsawing as doubts resurface about an imminent U.S.-Iran deal that would revive energy flows through the key Strait of Hormuz. Stocks are selling off on all the uncertainty, with the S&P right now 73.36. The S&P 500 index down 28, down 0.4%. The Dow lower by 327 points, down 0.7. NASDAQ down 31. For NASDAQ, a drop of 0.1%. The Mag 7 index, the Bloomberg Mag 7 index, holding on to a gain now of 0.7%. The VIX just above 17, the 10-year 4.38%, the 2-year 3.91%, and the 30-year 4.96%. Gold up $20 the ounce to $47.11. Right now, gold is up by 0.4%. As we've been reporting, after earnings, Dow member McDonald's down just about 0.1%. After earnings this morning, it is bringing in customers with beefed up value offerings and big bigger burgers, but it's also warning that worsening consumer sentiment will dampen second quarter results. McDonald's shares now trading lower by 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Carol and Tim, that is a Bloomberg Business Flash.
All right, Charlie Pellet there. Thank you so much. Well, the AI spend and build out is on. You know that. We talk about it a lot here at Bloomberg. Lots of questions still abound over the impact on the workforce. Does it destroy some jobs? Does it create others? There are questions on how much more productive we become. Will it create problems for younger individuals? Might it destroy our creativity?
But
might it spark it?
Might we get discoveries when it comes to healthcare and pharmaceuticals?
That's right. So the yin and yang, right, of AI, and we're just kind of watching this in real time. Wired reported out last night about some work that MIT researchers are doing, led by Pattie Maes. She's a professor at the Institute's Media Lab. They've worked on a new benchmark that could help AI developers build systems that better understand, Tim, how to inspire healthier behavior among users.
We wanted to know more. Let's get to the Business Week Women's Health segment, where we focus on key issues in developing technologies impacting the present and future of women's health around the world. We head to the MIT Media Lab in Cambridge, Massachusetts, and to Dr. Pattie Maes, professor of Media Arts and Sciences and head of Fluid Interfaces Group. She does research at the intersection of human-computer interaction and AI. So let's talk about these LLMs, these models, and how we can interact with them to actually benefit our health, because so much of what we've heard about has been the detrimental effects on our health and well-being.
Yeah, pleasure to be here. So basically, LLMs today, of course, are everywhere. They're being pushed to us in our text editors, Google search, all of that. But we still don't know what the impact is of using these chatbots for assistance in our daily lives. And one of the things that we are looking at here at the MIT Media Laboratory is exactly the impact of using these technologies day in, day out, on our cognitive functioning, on our ability to think critically, our ability to learn, our ability to solve problems, our socializing, our loneliness, and so on.
Yeah, that's the thing. One of the things I think about Dr. Maes is we did so well in keeping on top of social media, so it did no harm.
She's being sarcastic.
Thank you so much. He's right, though. Yeah. So my fear is, how do we keep on top of this? So tell us about the work you are doing to try and get a handle on how it might impact our brain, our psychological health, and how that might inform the companies that are in the thick of it.
Mm-hmm. Yeah, so we've been doing studies here at the MIT Media Lab showing that when you use these technologies to help you with a particular work task or with writing an essay, etc., it may actually improve your performance in the moment when you have access to these tools, but it can actually erode some of those same skills in the long term if you rely on these technologies for too much of your work, basically. So it's really important that we think about how these technologies should be integrated in our daily life and in our work life in such a way that they don't erode skills that we don't want to lose. And that's exactly what we try to focus on with our work.
So how do we do that? When we are because we are encouraged to use these. I mean, you have people come on our program and say, if you're not using these tools, then you are essentially, erasing yourself from the workforce in the future.
Yeah.
But there's that balance that we want to make sure we continue to be able to think.
Mm-hmm. Yeah, well, the emphasis of LLM development has been especially on increasing their capacity, their efficiency, things like that. But it hasn't exactly been on the design of these systems and designing them in a way so that ultimately the benefit for people is a net positive, especially in the long term. So we believe that we actually have to increase the friction in these systems, and that they shouldn't too readily just do all the work for us, but they should play a more augmentative role, basically, and support us in also developing our skills and keeping our skills sort of up to a certain level.
So what do we do? Is it create guardrails? Or when we ask a question, that's pretty easy. Don't you want to do that on your own? And, then there are those of us who are going to be like, yeah, it might be easy, but I don't have the time. I just wonder, how do we actually manage this? Yeah. And,
I
was going to say, and we're in a world where the government, and you have, is it OpenAI, right, that has been pushing back about concerns about weapons that can ultimately, or systems that can think on their own. So,
or Anthropic.
Anthropic, forgive me. Anthropic is who we're thinking about. But this pushback and the concern about what this means for weapons. But I do think about these systems that can maybe almost have a life personality of their own, and what damage they can create, especially for a younger population, but not just younger, all of us.
Yeah, well, these systems are not necessarily 100% correct yet all the time. They still hallucinate. They don't really deeply understand our world. And so it's important that we still are able to understand things, solve problems, and that we can supervise these systems so we know when they may be incorrect or when we maybe shouldn't be trusting them. So one of the things we do here at MIT is we've been developing a set of benchmarks that actually evaluate the impact of LLM use on people, on their ability to think critically, for example, and to think for themselves. So it's very important that LLMs don't just always give you the answer, depending on the context and who's the user and what they're using the LLM for. It may be better for that chatbot to just ask a question first of the user to engage them in thinking, because our tests show that when an LLM just gives you the answer readily, people stop thinking for themselves. They're naturally a little bit lazy.
Does that,
they stop.
Dr. Maes, does that align with the incentives of these LLMs?
No, it doesn't exactly align with the incentives, which is another reason why we are developing these benchmarks, the benchmark for the human impact of AI. Because if we have a benchmark like that, we can put pressure on these companies to actually do well on that particular human impact benchmark. I believe also,
we've only got
many. Go ahead.
I was going to say, there's only 20 seconds left. Are you optimistic that we're going to be able to manage this? Or are you more nervous? And just very quickly.
I'm optimistic, actually. I think we're going a little bit too quickly with rolling out these systems to billions of people, honestly, and affecting their lives in a big way. The science is only now catching up. But I believe that we can design these systems in a way that they actually lead to human flourishing and people doing well.
Be sure
not just the companies that make them.
Be sure to come back soon, because I do feel like, again, we're learning as we go, but it's an important subject. Dr. Pattie Maes at the MIT Media Lab in Cambridge, Massachusetts. You're listening and watching Bloomberg.